Hi guys, this is Blue League Market Forex Academy. Welcome back to our channel. Just wanted to do a short video today on break of structure, change of structure, and how you use it together with Fibonacci to create smart money. But before we do that, I just wanted to highlight something. So we have a mentorship program which we are currently running where we teach retail, smart money, and fundamentals. So for mentorship, it's 1,000 rand, South African rands. You can change it to your respective countries. Then that's just for 3 months. It's 3 months mentorship where we have module one and module two, and module three. Module one is retail, module two is smart money concept, module three it's fundamentals. We do our mentorship and tutoring via Google Meet and Zoom. We have classes almost every 2 days where we back test. We teach you everything, then we back test with you. So we just wanted to highlight that. If you want to join our mentorship, you can just go to the link in this video where we have a WhatsApp group you can join, then talk to whoever is the admin in that group, and yeah, you'll be part of the family. For those who are currently in Botswana, we are going to have a conference this December, 3rd of December. The venue is yet to be confirmed. Entry fee is 600 pullers for each person. This allows you to have entry for that day and also be part of our mentorship programs. The discussions for that day will be smart money concepts, fundamentals, and market secrets. It will be in Borona. We're still not sure yet with the venue. We're still talking to few venues. So please, if you're in Botswana, I'll leave a link below where you can join the Botswana WhatsApp group, and hopefully we'll see you there on the 3rd of December, Saturday, for 8 hours. And for those who are in Swaziland, we'll be having a conference on the 10th of December, the following Saturday after the Botswana conference in Mbane. The venue is yet to be confirmed. Entry fee is 1,000. We'll be teaching smart money fundamentals and market secrets. So the 1,000 gets you entry fee, and it also gets you access to mentorship. I just wanted to highlight that before we start. I'll leave all the links below for the Swaziland group and for the Botswana group. Then we'll do more conferences as time goes on, and hopefully get to go around and meet people and just teach smart money so that people stop becoming victims of the market. They stop being part of liquidity. Because as you know, if you've watched the previous videos, we want to help people not become part of liquidity, because forex is full of manipulation. So we help people not to become part of that manipulation and blow accounts. But if you haven't watched any of our videos, please go and watch the videos, subscribe, and like, comment. If you have any question, you're more than welcome. One of our mentors will get in touch with you and will help you where they can. With that being said, let's jump into the charts. So like I said, today I wanted to explain something which I think people struggle with when they try trading smart money. People like being confused and taking trades um, under internal liquidity. For example, let's take this example. It's an uptrend because the market was moving from here. It went up, it came back and retraced, took orders, but then it continued going up and broke structure. So now, since the market broke structure here, let me just delete that for now. Since the market broke structure here, it then went up to create this minor high, then it broke that high to create this high. Now, we call this high a weak high, and we call this low a protected high. We call this low a swing low and that high a swing high. So what happens is anything which happens between these 2 points, your swing low and your swing high, anything which happens In this case, I'm talking about all of this. So all this becomes internal structure. So you shouldn't be confused when you see a change of structure here and you think that the market has changed from an uptrend to a downtrend. The market is still by all means in an uptrend. What it's doing here is it's having a pullback and it's having internal structure being broken so it can go to the downwards. So if you want to trade this, you can trade it here by taking orders here, but just know that your take profit needs to be next to your order block, just before your order block. Um, it shouldn't go beyond that because the market, like I'm saying, is still going up. It's just that the market has to have a pullback. Like you guys know, the market doesn't go in a straight linear form, and if it's a uptrend, it will forever be an uptrend. The market has to make internal structures. It has to have a pullback. Sometimes it depends. The pullback can be a normal pullback. Sometimes it can be a deep pullback. But in this case, just for the sake of making you guys understand, but for the sake of visualization, this whole thing. So the market broke this. So this becomes a minor internal structure which was broken so that the market can continue going down. So if you wanted to trade this, you could have taken a trade from an order block there and you could have targeted just before the order block there. That's how you trade this. And let me just bring back the Fibonacci retracement so you can understand what's going on. Now, anything above this 50% zone, this zone, and you should be looking for sell orders only. You shouldn't be buying in this zone because the market is trying to have a pullback. Now, immediately the market goes below the 50%. Now this becomes your buy zone. So what you're looking for here in the zone is just buy and nothing else. Because if you sell in this zone, while the market is completing its pullback, you're going to get stopped out as more. You're going to get stopped out. So you need to be looking for buy orders only here. Because as you can see, the market broke structure there, then it continues going down. Now, in order for us to see that the market is indeed having a pullback, we saw by this double bottom liquidity. So it created this liquidity in order to trap those who trade double bottom because it knew that the market makers knew that the stop losses were somewhere here. So they created this double bottom so they can use it as liquidity. Now they take this liquidity after sweeping this liquidity, as you can see that the market went up. So this is important. Before one of these zones, one of this swing high and swing low, one of it is broken. Just know that the market is still making internal structures. Now, unless the market breaks a swing high or a swing low, just know that we're only dealing with internal structure. Let's say the market was broke structure there. After breaking structure, let's say here we had a break of structure. Break of structure up. Now, the market it's still in an uptrend unless it comes back and break below. Excuse me, let me do that again. The market is still in an uptrend unless it breaks this swing low. So we have a swing low and we have a swing high. Now before, if the market breaks this high, that means the market is continuing in an uptrend and will have a break of structure. But if the market comes and break this low, that means now a we're no longer having a break of structure, but now we're having a change of structure. So that's the difference between change of structure and break of structure. Some call it change of character, some call it change of structure. It's still the same thing. You just need to understand what is still going, what is happening. Now, immediately the market breaks this swing low. Just know that the market has moved from an uptrend to a downtrend. The opposite is true. If the market was in a downtrend, for example, and it had a pullback, it broke structure. Let me delete that. Let's say the market was going down. Let's say the market, why is this doing this? Let's say the market was doing this, it broke structure, it went up. Now, before it breaks this, if it doesn't break this and it comes and it has a deep pullback, then go down, just know that the market is still making a downtrend. But immediately the market breaks this point, now just know that we have a change of character. So that's the difference between the two, change of character and break of structure. Now let's just get few examples before we end this video. So as you can see, the market broke structure there. So this is break of structure. Now then we have this low and we have this high. Because the market came in broke structure there. So we have this low and this high. So all of this becomes internal liquidity. But as you can see that the market didn't come and take orders where it was supposed to take orders, but it actually broke and went down. So now since it broke that low, now we no longer have a break of structure, but what we have now is change of character. So that's the difference between break of structure and change of character. As you can see that the market changed character there. In fact, if we want to modify this, we can say that the market had change of character somewhere there, because some people don't actually take a wick. Like for example here it broke but it left a wick, so some people don't actually take that as change of character. They want to see a full body breaking that and going there down. As you can see that the market changed character there and it went back and took orders somewhere there. So that's what you need to understand about break of structure and change of structure, and also understand internal liquidity. So all of this was internal liquidity until this point was broken. Then we can have a new swing high or a swing low. So you just have to understand that and mix that with order block imbalances, your inducement, liquidity. Then you'll be able to trade smart money with just that understanding. So the next video will be talking about order blocks, type of order blocks to look for, because there are some order blocks which are used as smart money traps. So not all order blocks actually are supposed to be mitigated. Some order blocks are used as smart money traps because they know people trade smart money, so now they're becoming smart. So they're giving us false order blocks in order for us to feel like we need to take orders in a certain point, then we end up being stopped out. So that's what we wanted to explain in this video. If you want to learn more, you can either join our mentorship or you can go into our channel and watch the other videos we posted, and we promise to post more videos regarding smart money and how to trade it. Thank you guys. Please don't forget to like and subscribe.